Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on our podcast, we have Chad Robinson. Chad is a highly respected real estate professional with 25 years of valued experience in the mortgage and real estate industry. Chad holds a Bachelor of Economics with a specialization in international business from Carleton University and is both a fully licensed mortgage and real estate broker, although he does not actively practice real estate sales. Growing up in a real estate family, Chad began selling real estate when he turned 18 and has not looked back since. Forever the entrepreneur, Chad has worked to grow several mortgage brokerage operations and is currently the president and owner-broker of award-winning 360 Best Interest Mortgages, Inc., serving the Eastern Ontario area and lead planner for mortgage architects. Welcome to the podcast, Chad.
Thank you very much, Harris. Appreciate it.
Yeah, that's a rich history. But what really stuck out was as soon as you turned 18, you began selling real estate. And I just want to kind of jump in with that. How did you get to start selling at 18?
Yeah, well, it's a funny story. So, I mean, my family's always been in real estate and real estate sales since I was born. And my mom tells a story that she was doing an offer when she was giving labor to me. And back then in the day, you had to have a typewriter and like carbon paper and stuff. And so I grew up in the business and I never wanted to do it, right? You know, sometimes you fight back against what your parents are doing, right? And then so I'm doing all these part-time jobs because I've always been entrepreneurial and I've always been working and I'm grinding at back then, which was like $2 an hour or something. And I look at it going, man, I could sell a house and make whatever it was back then, $3,000-4,000, or I can work at the gas station for, $250. I'm like, screw that. I'm going to start selling houses. And I always take that attitude with everything I do is just, I can achieve it. I'm going to jump in. If I'm going to do something, I just believe in myself. And so I started selling real estate when I was 18, put myself through university doing that in colleges and winter and summer breaks, and just never looked back.
Yeah, I mean, what you just said reminded me of, I think there's a quote with the author of Rich Dad, Poor Dad. I don't know if you've read the book, where you never say, like, I can't do something. It's how am I going to get there?
Absolutely.
And so was your mom was in real estate? Was your dad in real estate as well? Was like the entire family kind of in real estate?
In one form or another, yeah, the whole family was in real estate. So I grew up in real estate, and even more than just real estate, but entrepreneurship was bred into me since I was a little kid. And that mentality of, go for it, you can do it, like you just said, right? It's not that you can't do it, it's how can you do it? And I've taken that life, that philosophy with me through my whole life.
And so then, I mean, you did your undergrad in economics and I would argue, and international business. So you did not get tempted by a big corporate job or anything like that? You were still like holding to your guns with I need to start my own thing?
No, well, it's funny. I had a dream of going on to was it KPMG back then, or Anderson Consulting? Yeah. And I remember this ad one day. It was a really cheesy ad, but it's funny how some things stick with you your whole life. It says, "Come work for us. You'll cross the international date line so many times you'll never get old." And right, I mean, it's cheesy, of course, but as an 18-year-old, you're thinking, "Wow, that's so cool." And that was what my career goal was. And so all the way through university, I'm making this money and I'm, hustling and doing these real estate sales. And I'm like, okay, great. I'm going to graduate and get these big 6-figure jobs and, yeah, yeah.
Yeah.
So reality checked in, right? So I get these job offers that are like 30 grand. And I'll never forget the interview that decided that I'm like, I'm going to pivot. So I've graduated, I'm making good money. And this guy says, yeah, come work for us. You're going to work 60 hours a week. We have all these parties. We do this stuff. We have the foosball table. And I said, okay, great. Because I wasn't scared of hard work, right? And I said, well, what's the salary? He's like, 30 grand. And I'm like, 30 grand. He goes, yeah. And he's all pumped. I'm like, I make that in my summer. I'm not going to come work 60 hours a week and make less than I'm making now. And I just couldn't compute. Right now, looking back, I'm like, okay, it would have been a whole different career path and other opportunities and work from the floor up, right? But 18-year-old, or I guess that case, 22-year-old brains don't think that way. So I just kept doing the real estate and then got into mortgages.
Yeah, I mean, maybe it's a podcast for another time, but I'm all about entrepreneurship. Nothing wrong with working, but it's something that, like, when somebody says 30,000, it's like you're thinking about, like, going back to the gas station. At least the gas station job, you need to get out. This you're kind of getting comfortable with, like, oh, I could tell my friends and where I'm working, but how much you're earning, and it just doesn't correlate. But back to kind of your real estate experience. So you went from selling real estate. What got you then into mortgage brokering? Because they're related, but like often enough, you'll have, for the most part, if you're kind of selling real estate or buying real estate, you kind of stay in that. And you kind of pivoted over to mortgages and then private lending, which we're going to discuss in a little bit. But what got you to kind of move over?
So yeah, it was a neat journey. So I've always kind of been a numbers guy since I was young. That's where the economics and business degree comes from, right? My brain kind of works that way. And sales were great, and obviously I did really well, but I didn't like the sort of that, I wouldn't say the human element of real estate, but the frivolity of a lot of real estate people. Like when you're selling residential in particular, people are making decisions on paint color, and I had trouble with that. I'm like, I don't care about the paint. It's the right floor plan. Like, paint the darn house, right? So I struggled with that just internally, and I gravitated toward the numbers. Now, again, this is going back quite a number of years, and back then we used to do mortgages with fax machines. So for many of your listeners that, the younger people don't even know what the heck a fax machine is anymore. So it was a very different world back then. And so in Ontario, in order to be a mortgage broker, you either had to get your real estate brokerage license or move to Toronto and go to Seneca College for 2 years. And I said, well, the real estate's an easier arm. Then I leveled up and got my brokerage license, became a mortgage broker, and then kind of just let the sales side of the real estate go. Over the years, I've traded on my own for my own properties and projects and stuff. And once you get a license, never give it up. That's something I really believe in. Always keep it going, because these professional licenses take a lot of effort to get. So,
you can't just walk into them. You have to really study and commit a lot of time and effort to actually get that license and then hold on to it.
Absolutely. And it's hugely valuable, right? And for now in the mortgage world, it's allowed me, especially the private lending world, I can jump into the real estate databases, behind the scenes and check valuations, check sales. I don't need to go third party to get that data. So it provided me as a lender this invaluable expertise to know what's trending in a location, and is this a good investment or a good mortgage opportunity for my clients.
Okay, and so for your mortgage brokerage specifically, what type of, and are you across the board, or do you look into first time home buyers? Where's kind of what you enjoy doing more so than anything else?
Yeah, so it's really transitioned over the years. So, at the beginning of the career was, you think you're a young salesperson and it's everything and anything, right? I can do anything. I joked when I trained my staff is the first answer was, can you do it? And it was yes, then go figure out how to do it. Now it's really all I do is private lending and construction and commercial. I personally don't do any residential anymore. I have team members that take care of it. So I really got specialized, and I'm hyper specialized now. The industry in particular in the last 6 months has really changed, and people that are not specialized, I think, are really struggling. So you'll have, to your point, a first-time homebuyer specialist, or you'll have a new to Canada specialist, or like in my case, private and commercial specialty. The rules are changing sometimes daily with the lenders, and you really need somebody that knows what they're doing in your niche for whatever it is kind of mortgage you're looking for.
Yeah, it's just, I mean, well, how I look at it is that there's just a mortgage used to be just a mortgage, but it's
Hmm.
it's not that simple anymore.
No.
It's highly regulated, and for good reason. But then that also means that there's like special products and all these things that it really depends on the specific borrower and their needs, and not even their needs for that moment, but their
Yeah.
long-term kind of trajectory. And the way I kind of look at it, and I tell everybody, because what kind of annoys me is a lot of people's fixation on what's the rate, right? And to me, I'm like, listen, okay, well, when you go buy a house, you don't say, you know what, I just want the most square feet.
Hmm.
You're looking at, like, okay, I mean, if you go for the most square feet, it's gonna be in a neighborhood you don't want, in a city you don't want. It's not gonna look
Hmm.
like the way you want. It's not gonna be. It may not be sellable afterwards. There's a lot of things, and the same thing goes with a mortgage. An interest rate
Yeah.
is just a square feet. There's so many other options, and then you have to figure out, what are you going to do with the house? Are you going to flip
Yeah.
it? Are you going to renovate it? What are you going to do? So I feel like that concept of just a rate, extremely annoying. And so when you look at all the options and what your plan is, then, like you said, you have to go to somebody who specializes in that specific area. Because even if you're specializing in private mortgages or whatever, and correct me if I'm wrong, there's like
Yeah.
there could be 100 or potentially infinite, but like there's a significant amount of lenders out there with different
Absolutely.
products, different portfolios that all
Yeah.
are kind of bidding for your business.
For sure. And we'll give you the right solution. Your square footage analogy is awesome. And it's the first time I've heard it that way. And it is really perfect, actually. I've often said, what's the price of a red car?
Yeah.
And people would be like, what do you mean? Like, exactly, right? What kind of red car do you want? And interest rates are the same. And there's when you go to a lawyer and sign a mortgage, most people think it's the 1, 2 pages at first when you sign the commitment. But then you go to your lawyer's office and there's a big brown envelope full of paper.
Yeah.
And 99% of people never read it, but that's actually your mortgage, all the terms and conditions. And there's pages and pages and pages of stuff. And you really need to have an expert help you, go through that and choose what the right, terms and conditions are. Some people want prepayment, other people don't. Some people want the variable. And then in the variable, there's a whole world of, adjustable rate mortgages and variable rate mortgages. And there's a huge difference between the two. Most people don't even know that there's two differences between floating rate mortgages. Um, and if they walk into a branch and the branch people are great human beings, but they're trained to sell one product.
Yeah.
And then it's up to the consumer to go and compare between the two. And not that the mortgage brokers are the end all be all, but I always believe in hiring a specialist in whatever you're looking for.
Yeah, no, I 100% agree. Now, normally in my podcast, I kind of jump into, this is a point where I kind of jump into what it's like working with you. But I want to
Hmm.
leave that a little bit to the end, because today's topic is something that not a lot of people know or have been exposed to,
Sure.
and there's just a lot of like, I would say, negative connotations to it. And so I want to talk about like the product itself, what it's about, who's it's good for, and then we'll kind of move into how it's what it's like working with you. So today I want
Sure.
to really dive into like private mortgages, and so if you could just give our listeners a quick kind of understanding of what a private mortgage is exactly.
Absolutely. So a private mortgage is a mortgage like any other mortgage, like you'd get from any of the big banks. The only difference is the person giving the mortgage is either a private individual or what are called mortgage investment entities, MIEs is what the government's calling them now. So they're pools of funds that are privately run to provide mortgages. And the difference with these things is the lenders, so the person or the small company makes up the rules. They can say, I'm going to give you 200% loan to value or, finance above the purchase price, which nobody does, but it could be. Um, so it's up to those companies privately to decide whatever their rules and regulations are. They're not governed by the government, other than they can't charge criminal rates. But barring that, they got to be honest and ethical. But there's no TDS or income qualifications or credit qualifications. It's just what you are willing to pay and that lender is willing to charge to create the product for you. And so it provides a lot of opportunity for borrowers, and especially nowadays. And I don't even call it private lending per se
Mm-hmm.
anymore. It's really solution lending,
Mm-hmm.
and and it's a temporary feature. It's not a long term. You're not going to have a private mortgage for 20 years. It's to bridge you for a gap to fix something usually.
So yeah, and I think that where the biggest difference between private and you could say your conventional mortgages is that conventional mortgages, when you're going to a big bank, they're heavily regulated. There's certain things they can and cannot do,
Mhm.
whereas a private lender and the borrower, they kind of dictate all of the rules or most of the
Exactly.
rules, 99% of
Yeah,
the rules, in how their relationship is going to be, what it's going to be looking like.
for
So
sure.
yeah, sorry, were you gonna say something?
Oh no, I was going to give you a good example.
Yeah,
That a lot of people can relate to is it in a divorce separation issue. A husband is leaving the wife or vice versa, and the main banks will not give you a mortgage in most cases without a fully signed separation agreement.
yeah,
So if you don't have that signed, you're stuck. You
yeah,
can't sell the house. And I've literally had people come to me. They are estranged from their spouse. They hate each other. There's like metaphorically throwing knives, not in reality, but they don't want to live with each other, but they can't leave the house, and they're stuck. And sometimes this takes 6 months, a year or two to get rectified. But a private lender can come in and say, "Listen, I don't care about that. Do you guys agree to sell the house? Yep, good. Here's your check. I'm going to give you the mortgage. Boom. Next week it's done. The parties can separate, move out of the house. Again, it's a very different interest rate. But that's a really, an example that we use all the time in private lending. Good people, good jobs, good credit, but they're in a situation that's preventing them from going to a regular bank.
yeah. And I mean, the interest rate may be a bit different, but it's also your peace of mind. So you're kind of
Yeah.
looking at balancing. You've got options, and sometimes relationships, if they're not working out, you do need your space. And it's not healthy for anyone maybe to stay in that situation. You need to get out.
Mm.
So what is, I would say, and you gave a good example, and I was gonna ask for examples, but what is, this is kind of I guess a difficult question, maybe difficult question. What is your most common scenario for people who require private lending? Because I feel like, here's the thing, and the reason I ask this is yeah, divorce is a really good solution, but there's a lot of different solutions, and I feel like people won't understand until we kind of give them a
Sure.
few solutions.
Yeah, absolutely. So yeah, divorce is a big one. A credit challenge is another one. So they either are getting behind on their bills or they're just going minimum payments. They're not getting ahead. They're drowning in debt. And the credit card payments are big at 18, 20%,
Yeah,
right? A lot of these. So you can come in for a private mortgage at 10, 11% with a different kind of payment structure that will then give some credit relief so they can cash flow, they can breathe, and then work out a payment plan after. So, debt consolidation is a big one. And a lot of people will say, oh, 10, 12%, that's expensive. Yeah, but you're paying 18, 20,
yeah,
22. Some of the credit cards have seen 25%.
yeah,
So
yeah,
it's half the cost of those.
yeah.
Um, Another one is entrepreneurs. So a big one is people buying a property and renovating it that are in bad or poor condition. So I've seen some with holes in the roof, massive damage to a property that a bank won't finance that kind of property, but a private lender will.
Yeah. So would you say, so you've given two different scenarios. One is more of an investment financial decision. The other one is more of it's a financial decision as well, but it's more of a personal, you could say discretionary spending, almost kind of solution. How is it kind of 50-50? Do you see more investors? Do you see more on the personal side? What's the blend?
So yeah, it's a blend for my portfolio, but
Yeah.
I purposely make it that way. Some investors and some kind of brokers and mix, like I run target one or the other. I always like in my whole career, I've always tried to have balance in everything I do. But I'll give you a good example. A lot of your listeners can probably relate to about the debt consolidation one. The
Mm-hmm.
main banks are very, very process driven. So I'm talking the Scotias, the
Yeah.
TDs, the
Yeah.
RBCs, the BMOs. If you don't fit a box, you're just declined.
Yeah.
It's like a checkbox, like an airplane, right? Check, 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 check. And the credit score is one of those factors. So they'll come in and say, in order to do a refinance with Scotiabank, or I'm just going to pick on Scotiabank. I love Scotiabank. We work with them lots. Um, you need a credit score of X. And I think
Yeah.
it's the last time I looked, it was 650 as a credit score. But if you're writing all of your credit cards at a very high limit, So if you can borrow $100,000 in credit cards and you're at $95,000 or 100, your credit score is going to be decimated most cases. I mean, it's a very complex thing, but limit
Yeah.
to balance is one of the key factors. So a lot of times, and this just happened to me about 8 months ago with one of my clients, they couldn't get refinanced, even though they had never missed a payment. Their credit payment history was perfect. They had a great job, worked for the government. Because his utilization was there, it was too high. His credit score fell below the threshold for the banks to give him a refinance. Now, stick with me here because it's kind of doesn't make common sense, but this
Mm-hmm.
is what our lending world has come to. So we put a private mortgage on his property, rolled all of his debt into the mortgage. So same amount of borrowing,
Yeah.
no difference in the total amount. So he owed 100 grand yesterday, he owes 100 grand today. It just goes from a credit card to a mortgage, or multiple credit cards to one mortgage. Roughly the same payment structure, funny enough, because he had a lot of low rate credit cards. And now all of a sudden, 30 days later, his credit score went up 150 points.
Oh, wow.
Then he just flipped, went to Scotiabank, got a line of credit on his house, a HELOC, paid off the second mortgage.
Oh, wow. So Scotia actually refinanced the entire thing.
Yeah,
Oh,
but
wow.
if he would have went originally, his credit score was below the threshold, and it was a hard decline.
Yeah, and then he'd have to find alternative lenders who
Yeah.
are charging maybe not as much as the private, but on a larger sum. So it ends
Hmm.
up costing you more. That's
Yeah.
interesting. I safe to say, I've never heard of something in that. I mean, as a real estate lawyer, we're doing the last mile, so I see like just we're told to pay out stuff, but as a
Yeah.
strategy, that's amazing. But
Yeah.
similar to that, I feel like is also like we just discussed was the investor side where
Hmm.
sometimes what I find, and correct me if I'm wrong, if there's something that
Yeah.
I'm saying that's
Sure.
incorrect, but when you're making offers for commercial properties, especially a few months ago, and I'm sure for investment properties, it hasn't changed now, even if the
Hmm.
market's slowing down a little bit. But you need to be like on top of your game. You need to be able to come to the table with money, and there
Yeah.
is little room for getting approvals and all of that. And a lot of times for investment properties, it takes longer just
Yeah.
because there's more paperwork. And even though sometimes what I've seen is the investment property could be half the price of a residential home, but it takes 10 times longer to approve, right?
Yeah.
The value is like half as much, and the residential, the banks just cut checks sometimes if everything falls in place, like you said. But with the investment property, they're looking at it and they're like looking at your renters, they're looking at all the lease agreements, they're looking at all this rent rolls, cash flows, all this other stuff to make a decision. And
Yeah.
sometimes you don't have that time to kind of go in and do all of that.
Absolutely. And when it comes to the property flippers a lot that we work with, and they need the confidence to go put an offer in, like you say, and close in 10, 15 days. Not just get an approval in
Yeah.
15 days, close in 15 days. A lot of times the bank's not even returning your call in 15 days lately.
Yeah.
So they'll come in and they'll be pre-approved by us and say, okay, you got 25% down, because typically that's our threshold. And other private lenders have different rules, but that's
Mm-hmm.
usually ours. And they're pre-qualified. So we already have their credit bureau and their financials and everything else. And I say, as long as you get an appraisal that supports the price you're paying, you're approved.
Yeah.
And here are the terms and conditions. Here are the rates and fees. So they're putting an offer in unconditional on finance, or maybe conditional on appraisal or inspection, but they know we have their back.
Yeah.
So in that case, it's a business decision. The costs and fees are just like the price of drywall or the price of anything else.
And it makes a huge difference because you're already going into an uncertain market. Uncertain being like you don't really, as an investor, it's not an emotional decision. Like you're
Hmm.
talking about earlier, you're looking at like the floor plan. You're making sure hopefully nothing's wrong with the building. There's no
Yeah.
unexpected expenses. So there's so many variables in your mind set that like going in thinking, okay, you know what, I got to put in this offer and then maybe get financing is something that you don't want to put on that all that due
Hmm.
diligence into the building and then figure out, you know what, they haven't even entered my name in the database in the 15 days that I had to close, right?
Yeah.
So, I mean, I find that to be the biggest peace of mind from an investor perspective to have
Hmm.
somebody behind you who will say, okay, these are our limits. And like the boundaries, like you said, so you're saying it just has to be an appraisal coming in within a certain amount and it's fine, or is there anything else that you're
Yep.
looking at?
Well, these clients are already pre-approved by us, and
Yeah.
we kind of know what they're doing. Again, these are investors that are typically buying. It's not their first time buying.
Yeah.
Um, so yeah, it's an appraisal to make sure. So if somebody's buying a townhouse, and they're paying $500,000 for this townhouse, and I'm just going to pick, whatever they're buying in Mississauga, and well, they can't buy a townhouse for $500,000 in Mississauga, but let's just pretend. And
Could dream.
and they know, so yeah, I'm going to put 100 grand down, and I'm going to rent it out, and
Yeah.
I'm going to renovate it, and because it's in a mess or whatever. Sure, like all day long, because they give me the geographic area ahead of time. I know what they're looking for,
Mm.
and we get the terms and conditions up front.
So in your experience then, and I know there's no strict answer to this question, but
Yeah.
I'm still gonna ask, how how quickly do people kind of flip from that private into some other product?
3 months to a year is usually the sort of the threshold. So the flippers are typically 3 to 6 months
Mm-hmm.
because they're going in there, they're a business. They're coming in, they want to, because they're burning interest, right? It's a cost, and they
Yeah.
want to get that
Yeah.
cost as cheap as possible. So they'll have the crews in there. If they're really organized, it's 3, 4 months. Where somebody that's trying to do maybe a debt consolidation and needs their credit to rebuild, that might take a year.
Mm-hmm.
Um, Another good scenario people use private lending all the time is they're in a new job and it's partly commission based. So they don't have enough history to show the bank that they've been earning this commission, but they
Mm-hmm.
know they're 8 months in the job and they've already made 150 grand. So they know that's there, but the banks need 2 full years of income tax. So as
Mm.
another good scenario where
Yeah.
people will use privates.
So that takes time then. And then moving to interest rates, and I know that's
Yeah.
not the end all be all, but my question would be not exactly where the interest rates are, but what kind of affects it. Are private mortgages fixed? Are they variable? Like, is it both? Is it up to you? And like, what does a line mortgage kind of offer?
So the industry used to be fixed,
Mm-hmm.
because really prime rate hasn't changed for ever, in any significant manner. Now most lenders are flipping to a hybrid. So we'll typically do a first mortgage right now at like 8.99 rate, or prime plus 4, the greater of.
Okay.
So it's still a fixed rate, but if prime really does move, then your rate will move too. We don't like variable rates, but it's so uncertain right now
Yeah.
that most private lenders are baking in something like that just to account for, a crazy, if Bank of Canada doubles the rates or something, it's,
Yeah.
then the lenders would be underwater.
So when you say 899, I mean, though, that's a pretty good rate compare if you like think that fixed rates are like at 5 or whatever wherever they are. That's a
Yeah, Scotia
phenomenal rate.
today, a fixed 5 year at Scotia is like 5.3 today, I think.
Yeah.
So it's not variable. You can still get in the twos, I think, but yeah, it's definitely hasn't the private market hasn't quite caught up yet, but it will. So I expect us to be probably over 10 for normal first mortgages by the end of the summer.
Yeah, I would imagine because 899, given even though it's easy for the borrower, but there is more risk on the lender because they're not necessarily looking at
Yeah.
as many variables as a conventional lender would. Therefore, that's why you have that premium because that due diligence and all of that is not there. So
Correct. But we've hit this perfect storm of stuff. And yeah, and again, I can geek out on mortgages all day long. Um, but we hit this perfect storm from the borrower's perspective right now because there's so much volatility in the stock market. There's been a lot of money flowing into real estate debt. And so a lot of investors are looking for stability and cash flow. So there's a lot of money coming into, or has been over the last year, into this space.
yeah,
So the mix are flush. Well, they were before the last 2 months. Are flush with cash, and consequently has driven the rate down.
yeah,
But what we're seeing in the last 2 months is with the Bank of Canada changing and the big banks really tightening up their lending rules, there's been a massive push on private lenders, and just demand. The demand for our products was high before. It's literally doubled in the last 2 months. So we're going to start seeing rates really come up, as all this extra liquidity in the private lending space gets eaten up.
yeah. No, I mean, and if like the way I'm looking at it, because I did not know, I thought, frankly speaking, I thought if fixed are going up, private for fixed, the conventional rates are going up. I
Yeah.
assumed you guys would be in the 10 to 12% rate. 899, and I'm assuming this is for like not
Yeah.
everybody, but like depending on how you
A good
qualify.
first mortgage. Yeah.
Yeah, like it's
Yeah.
that's an extremely low mortgage, especially if it, or variable plus 4%, just
Yeah.
because a lot of times now, like you just said, like there's so much going on that a lot of people are not going to be qualifying with the interest rate changes, with all this other stuff. That doesn't mean you got to lose your home or that you have to postpone buying a home,
No.
because prices are actually coming down because the
Yeah.
interest rates are going up and there's less buyers. That doesn't mean you can't enter the market.
Right.
For me, it's like, you know what, like I find like, if you look at 2008, and this is my
Mm-hmm.
perspective, 2008, everybody panicked when everybody was selling. But then those
Mm-hmm.
people who went in at that time, and it's hard to figure out when the bottom of the market is, they made the most money they did in their lifetimes. Like a lot
Oh
of
yeah.
these, like at least the YouTubers that I follow, a lot of these business guys earned a lot of the majority of their assets since 2008. Before that, they had like nothing, even
Yeah.
before the crash.
I have a funny saying, and it's kind of served me well over my lifetime, is do whatever the opposite of the masses are doing.
Yeah. No, I 100% agree. No, and I'm looking at it this way. There's like, the funny thing is, and when you're supposed to go in and bid half a million over asking, right? Or you're kind of blind, or listed. I mean, when they say half a million over listed, the list prices were low. That's a whole different story. But
Yeah.
point is, you're going into a blind bidding war. Everybody's jumping in, but as soon as it cools down, everybody's freaking out and they're going, no, no, I don't know if I want to pay
Yeah.
100,000 less than the guy who bought it for. Like, well, what are you thinking about? This is a no-brainer.
Yeah, again, it's probably is a topic for another show, but I always believe that you should own your home,
Yeah,
and it gives you housing security. So true housing security comes from owning your home.
yeah,
And if you're really conservative, you can take a 10-year mortgage. Now, I don't even know what the price of that is today, but you could,
yeah,
and then set it and forget it. That you don't have to. Nobody can kick you out of your house. Nobody can raise your rent, right? You're solid there. Now, investment property, it's a business decision, and that's a bit of a different thing. So I always believe you're better to buy when, if possible, than rent.
yeah. So, moving on to what it's like working with you now. Normally, I do ask this earlier on, but I wanted to kind of get this stuff out of the way and let
Sure.
our listeners understand, like, who can really use a private mortgage, whoever is in that scenario. How can they
Yeah.
reach out? What's the process like? Do we just give you a call, just send you an email? What's the process like? And for both, please, for the personal side, if
Yeah.
we're kind of consolidating debt or whatever, personal need, and the investor side.
So two different things. So our company is Align Mortgage. So we work with other mortgage brokers right across the province. They send us deals all the time.
Mm-hmm.
So if you have a mortgage broker you're working with, you can just tell them to send it to us. We're on all the major systems that all the mortgage brokers uses. So that's one scenario. You can always just I'm sure we'll have the contact information, the show notes and stuff. Reach out to us. We're really easy to work with, and we're straight up. If we can help somebody, we will. If you have equity in your home, then chances are we can help you. It's just a matter of interest rate. Somebody with, if your house is worth $1 million and you only need 50 grand, that's a different mortgage than if you need a mortgage for 800 grand.
Mm-hmm.
All right. So the amount of equity in your house determines the interest rate.
Is
Is
there
one of
a
the factors.
minimum? Is there a minimum that you do and a maximum? Maximum, I'm assuming, is 75%, so that's the value of
Yeah.
the house. But is there a minimum, like just absolute value that you'd lend?
No, I mean, I'd probably say 50 grand. Below
Yeah,
that, even at 50 grand, it's not worth the legal paperwork a lot of times.
yeah,
By the time you add lawyer fees and broker fees and appraisal fees, it's just the effective rate goes so high that it's many times not worth it for a
yeah,
consumer.
yeah,
And what's important to us is we really want to help people and not just have them on this debt cycle. So if we don't see that what we're providing is going to help the customer along, then we're not interested.
yeah,
If somebody's been in a private mortgage for the last 15 years and they go from every year from one private lender to another, to another, to another, that's not our client. We're that people that are going to help that divorcee client or the entrepreneur or somebody that's working, they're working Uber and, 5 different gig jobs and the banks just can't get their head around it. Perfect. You're our kind of client, but not the perpetual borrower.
So you're not, and this is what I think where the for a lot of individuals, that's what the mindset is where private lenders try to push you into default, which I'm not saying they do or they don't, but that's not your client. Your client is somebody who has maybe a difficult time showing how much they earn, or because of their life circumstance, they can't get to an A lender or an alternative lender. So they're coming to you as a temporary fix before they move back to where they were.
100%. And on the flip side, there's the investor side of the business, right? So that's also, if anybody's listening that is interested in investments, we also bring in investors to lend in private money and through our mortgage pools.
Okay. And so so the investors are the ones who are in that context investing in your mortgage
Correct.
products. But what
Yeah.
about investors who are looking for just in investment properties? Do you prefer everyone to go through a mortgage broker, or do you prefer them reaching out to you directly? Like, what's your perspective?
We do both.
Yeah.
So I am a licensed mortgage broker. It's not really what I'm trying to directly market for
Yeah.
anymore, but we are fully
Yeah.
licensed. And a lot of it has to do with that relationship.
Mm-hmm.
If a client has a relationship with a mortgage broker, they know them and trust them and is giving that big planning, work
Yeah.
with your mortgage broker.
Yeah.
And then we're just a tool in their toolbox. Because our focus is pretty narrow, right? We're really just private lending all day, every day.
Yeah.
That's our focus. So if somebody's looking for that, I'm happy to have them as a client. But most times it's transitory. So I'd almost rather them work with their mortgage broker, create the exit plan, work on the credit repair, or whatever that solution is, and then I'm just providing that solution.
Okay. Yeah, no, and I always advise clients to kind of stick to a broker, develop a relationship, and then because they will know your life, like where you want to go in life, what you want to do, all of that stuff, and use the products that they have to help facilitate that move.
Yeah, 100%.
But yeah, no, thank you for joining, come on the podcast. If anybody wants to reach out to Chad, I'm going to put his contact information below. Align Mortgage, if you're interested, if you have a mortgage broker, and you're thinking of products that interested you today, that anything we talked about, Corporations Align Mortgage. Any last words, Chad?
No, happy buying is what I say to everybody. Go out there and look for the opportunity. And there's lenders like us that are good quality lenders that want to support you.
Awesome. Thank you for coming on.
Thank you so much for having me.